Lagos, Nigeria is playing host to Lars Christensen, a Danish businessman, entrepreneur, and investor with over 30 years of experience across the banking and financial sector. Mr. Christensen is a global pioneer in FX and derivatives trading, having co-founded the online trading and investment platform Saxo Bank in 1992. After 20 years as co-CEO of Saxo Bank, Mr. Christensen stepped down to focus on other investments through his private family office, Seier Capital. Seier Capital is 100% owned by Mr. Christensen, with assets under management of about $1 billion. And he doesn't manage capital for any other investors. He was a very early adopter of the internet and is now focused on the transformative potential of blockchain in its various forms. Mr. Christensen, you're very welcome. Thank you so much for joining us. Fantastic. So while you're here, it's understood that you're exploring Seier's, as far as your portfolio is to explore blockchain in emerging markets. How much potential do you see of that here in Nigeria?
I see a lot of potential for it because, I see a lot of potential everywhere, but I think there are a lot of solutions that are very logically deployed in the African continent, where you have some advantages of not having quite the same legacy system in many ways, and hence can actually easily adopt blockchain than many other places. So I think there's a lot of opportunity, and we see a lot of interest from the African continent in general, and I see also Nigeria very much as a leading tech hub in Africa. So for me, it's very interesting to explore the blockchain opportunities and other tech opportunities for that matter.
And I'm glad you mentioned tech hubs, because we understand that as part of your trip here for a couple of days, you'll be visiting a number of tech hubs in Lagos. Can you speak to the impact that tech hubs, the impact that tech hubs can have in the nation?
I think those hubs and incubator platforms in general are very useful, because they often bring relatively young entrepreneurs into a more formalized environment, if you will, teach them how to structure a project, teach them things that they may be lacking in their knowledge and their background, and not least if they also supply a startup investment, etc., can kick them off on the first travel, and hopefully also help them on the subsequent, probably quite difficult travel of raising additional funds going forward. And in order to do that, you need to not just have a good idea, but you need to be able to explain that idea to investors. You need to be able to present it well to investors. You need to know when to take in funds and when to bootstrap. And I think they serve a useful purpose all over the world in terms of filling in the gaps with young entrepreneurs to teach them about aspects that maybe is not top of mind when you think, oh, I got a great idea, I'm gonna disrupt the business, but at the end of the day, the business you're disrupting are people that are quite experienced, have probably much more money than you, and in order to be able to really be a competitor, you need to understand all of those aspects of running a business, which is much more than just having a great idea.
And is that going to form part of the conversations you'll have with those tech hubs as you're visiting them?
I'll be speaking to some founders, I understand, and give them my input for what it's worth on how I saw that, because I started out as a very young man, believe it or not, once upon a time, and didn't know much about this stuff, and you have to learn as you go. But in those days, to be honest, there wasn't really any kind of tech hubs or incubation places where you could learn. So you had to sort of learning by doing. But I think today, to also accept sometimes that there are things that you don't fully understand in depth and benefit from those offers of assistance, I think is very recommendable to entrepreneurs, because there's a lot of stuff in this: the finance, the people management, the hiring, the internal culture, the ability to explain your idea, the ability to grow in the right way, not too expensive, but still aggressively. So there are many things you can learn, and you don't necessarily have to learn it the hard way by making a lot of mistakes and then correcting it. So if somebody is willing to put you on that right track along the way, I think that's a great addition to that space that we didn't have 30 years ago, right?
Fantastic. I want to get your thoughts on something, since you mentioned how much you'll be sharing your input while you're here. Investment, local funding versus foreign investment in the country. There's a company called Parfait. It's AI leveraged direct-to-customer platform that I think is in the wig industry. It's three co-founders. They're all female. Two of them are Nigerian sisters. They raised a seed round of $5 million from foreign investors. One of them is owned by Serena Williams. The debate in Nigeria has been about whether or not the locals can raise that type of money, right? Versus having to depend on. And now, of course, you're a foreign investor, so maybe you're biased to one side. But what do you make of that debate as to whether or not these local ecosystems can raise this type of money?
Well, first of all, I think it's pretty cool to get Serena Williams
on your
company,
team, right?
And having 5 daughters, I know exactly how many wigs and how much hair stuff you have to spend money on. And I know a little bit about the company, and I think it's pretty cool what they do with AI, etc. So all good luck to them. It looks like a good project. Well, I think what really is needed here, and that would also be my preference, to be honest, I wouldn't mind allocating some money to African tech and Nigerian tech, but I would really like for a trustworthy local capital fund to do this, right? Okay. And I think that's probably the most important out there, that you have these places where people that are willing to take the risk, but haven't got the time or the insight to really go in depth on many different use cases and projects. To get somebody that you trust to deploy that money, spend 24/7 on building those companies together with them, sit on their boards, give them advice. For me, that in recent years has been the preferred way of investing, rather than picking an individual company, because I also know that, sadly, but that's a fact, that most of these young companies will not succeed, right? And it's very hard to predict which one will and which one won't. But one thing is for sure, that the one that has the best advisors, the best access to subsequent capital rounds, etc., have a better chance than somebody that doesn't have it, right? So I think that building a VC environment of venture capitalists and funds that are willing to take many chances, it's like, you spread your bets, basically, right? And many of them go wrong, but occasionally you will hit 1 or 2 or 3 companies that does really, really well, and that'll pay for a lot of mistakes. So that's my preferred way of doing it. I used to actually go in and analyze a lot of companies myself. It's very time consuming. Often you end up spending time on the wrong ones, because you tend to spend time on the ones that need help, whereas that leaves less time for the ones you should be supporting and pushing to grow a successful model. So I think building of those types of funds are very, very important. And in that sense, I think that would also open for more foreign capital, because I think a lot of investors with money to spend and high risk willingness, which I do have, would be more likely to invest in that type of vehicle than sit and spend a lot of time analyzing a lot of individual companies, right? So building that kind of ecosystem of organized investment, having a set of laws that make that possible and easy and understandable and on strong footing, that would probably help the environment greatly, I would say, because at the end of the day, that's how most companies get funded in Europe today.
Fantastic. I'm glad you mentioned the environment, because you're visiting at a very interesting time. Without naming names, there's been a couple scandals in the news and in the tech space regarding corporate governance. I take it you've heard of what's been going on. What's your take on the impact of corporate governance on the tech ecosystem?
Well, that was one thing I forgot to mention about the hubs and the incubators, that they will also teach you that kind of thing. Right now, I don't really want to comment on individual cases, because I don't know enough about them. But of course, there will be some people that make mistakes, deliberate or non-deliberate, and you will always have that. That's part of the high risk willingness that you have to invest in this space, right? I think, of course, governance is very important, and it's very important for professional investors to see that there's an adequate internal control, that there's a formalized board and a management, and that you feel comfortable that people will report back to you when they are, and they have an internal policy for various important aspects. And I think, again, that's something that's not immediately on top of your mind. If you're a young kid and you have a great idea, right? You say, let's just go out there and get some customers, right? But once you get successful and you have hundreds of people that you need to motivate, make sure, treat each other nicely, make sure that they are also there for their career, because at the end of the day, they don't work to make you rich, they work to further their career, and maybe one day they want to build their own company. So of course governance is important in all aspects, and also having a clear and defined legal system around it is very important for investors, right? Absolutely, and I think one thing you should really think about, and I always did that in Saxo Bank, etc., is that you need to define your corporate culture and your values, right? You may know them sort of inside your heart, what they are, but it's very important to actually get them down on a piece of paper, get the employees to buy into them. This is how we interact. This is how we behave towards each other. This is how we behave towards our clients and our partners and our investors. Because if you're not very explicit about that, you might think you have the same values, but at the end of the day, they'll shoot a little bit in different directions for different people. And of course, that can feel maybe a little confining when you're hiring people, but if people don't fit your corporate values, they shouldn't be there in the first place, right? So I can really only strongly recommend that when you start a business, or at least as you are starting a business, you really think closely about what do I want this business to be? What values do I want it to represent? What internal relations do I want between my people? And you have to be specific, and you have to preach it to all new employees, and you have to make sure that everybody occasionally are forced to sit down and consider, did I really live up to the company's values? Did I live up to my own values? Because if you don't do that, you have a risk of things sort of floating, and that might be all right if you're 15 guys that know each other, right? But if you have a company with a lot of people, you can't automatically assume that everybody shares values, right? I mean, in Saxo Bank, we probably, because we went very international and we like to have local people understanding local custom and speaking local languages, obviously. And if you have 60, 70 different nationalities in a company, which do come out of different value sets, it's extra important that you define this very clearly. And then people must say, do I buy into this or do I not buy into it? If you don't, even if you're the best sales guy, go somewhere else, right? But then you also have to stick to them, and you have to have consequences for it. You reward people that actually live up to your values and perform, and you restrict or it has some consequences for people that don't, and that can be quite tough, because sometimes it is one of the best persons that are not living up to the values. But if people figure out they don't care about it anyway, because that guy makes them a lot of money, so he can do whatever he wants, well, I would recommend that you have a level playing field for everyone, and if they break it or can't accept it, they're better off being somewhere else, right?
Very in-depth. Thank you for sharing your thoughts on that. I think we're going to still stick with you and continue the conversation. We're going to take a quick break. We're still talking with Lars Christensen right here on the Global Business Report. We'll take a break and we'll be back with more. Welcome back to the Global Business Report here on Arise News. We're still continuing our conversation with Lars Christensen, CEO of Seier Capital. Thank you so much for sticking with us, sir. All right, so we just had a very in-depth answer there on corporate governance and its impacts and so on and so forth in the tech ecosystem. Can it deter investment?
I think if you have very visible, bigger problem cases, of course that doesn't do very well for any kind of ecosystem. But that being said, I think as a risk-willing investor, you understand that is one of the risks, one of many risks, right? That you have those types of problems. So I wouldn't say it's probably a big factor, but of course the more positive stories you have coming out of your environment of successes and good people and successful business models, the better. But at the end of the day, I think in any country, in Europe, investing in an early startup tech space is a high-risk business, right? It doesn't get any less high risk because you're in a different continent to your own. So you know that there are risks of, as I said before, you know that the majority of this is going to go wrong, right? You just need to have the big winners as well. And in that case, of course, if some of the big winners turn out to have problems, that's not great. But I don't think it's something of major impact. And I even think a company that has that specific issue, if they, whatever that might be, if they go out and they state very clearly, we have fixed it, we apologize, we move ahead, I don't think they will get a second chance anyway, right? But it's very important to take it seriously. It's very important to communicate around it. It's very important to take genuine action to fix the problem. But if you do that, everybody makes mistakes, and investors are forgiving people, not least because they don't have so much choice if they have that money in your business, right? So, but communicate and mean it if you're fixing a problem, right?
Thank you for that. Bitcoin. I understood you were an early, proponent of Bitcoin, but you've had concerns about it. Can you speak to your concerns you have about Bitcoin?
Well, I had some friends that found Bitcoin very early and introduced me to it. So I think I've been involved for 10 years or something like that.
Wow.
Which is quite a long time in that space, right? And I did find it fascinating. Now, Saxo Bank was very big on trading, let's say, traditional fiat currencies. And I sort of intuitively felt that wasn't quite as obvious in 2011 or 2012 it is today, that this could potentially be a similar type asset that might interest some of our clients. So I was quite interested in it from an early stage. But I also, of course, while I did that in my free time, I was also the co-CEO of a retail investment bank, heavily regulated. And I could see everything that had been going on in the regulatory space of the traditional finance area, even if we were a bit cutting edge, being early on the internet, etc. But the regulatory aspect only went one way, more. Right. And for me, it was very clear, although to many of these sort of kind of anarchistic people that the Bitcoin space came out of, thought that might be different for blockchain and cryptocurrencies. And I with my experience from the other space, I'm absolutely convinced that that's not going to be the case. You're going to see a regulatory move on crypto, on blockchain, on all these areas, and eventually it'll end up in pretty much the same boxes as they spent 30, 40 years developing for the traditional finance. So it's not very hard to predict that it's going to happen, but nevertheless, a lot of people kind of didn't think it was going to happen, right? But that's kind of a work damage from 30 years in the traditional industry. The regulation is going to happen. Might be a little late, might take a little while, may also go a little bit the wrong way, but ultimately it's there and mostly for the good, right? Mostly to protect people against excesses and people not doing what they should be doing. Okay. So that was the skepticism I got with the early generations of this, that I didn't feel, one, that there was a wish from the actors to accept this aspect. And that's just the reality. You have to accept it. And secondly, that doesn't lend itself very well to it with its anonymity and which goes straight against the grain that you've had in traditional finance. So you actually do want to know that people don't finance terror, that they don't use it for money laundering, they don't use it for criminal activity, etc. And the anonymity aspect of a lot of blockchains, not just the early ones, goes straightly against what regulators have tried to fix in the other space for a very long time. So I think that's a big problem that needs to be addressed. So as long as people are not willing to that, or even not able to because of the structure, that will always put a dampener on early generation blockchains, and with some justification, right? Because I think those kind of rules that we want to protect people against criminals and against terror and against money laundering, I think is genuine concerns that a society must have. So you got to accept it, and you got to be somehow built for it, and that's probably the problem here, that these systems are not really built for it, right? And they're very hard to add afterwards, right?
Gotcha. Now, central bank digital currencies. Nigeria is the first African country to launch one. China's exploring one. The US, Europe, they're looking at, I think, some Caribbean countries as well. What do you make of the central bank digital currency, CBDCs?
I think we'll get there because the only reason really that blockchain tends to use its own tokens is that that's an efficient way to immediately pay for transactions in a low cost and simple and secure manner. Now, if the traditional payment system had those features, which they don't, there's a delay in the transfers, there's high cost, there's a number of aspects there that are quite clearly problems. If they had if they had been there in place, I don't think necessarily early blockchains would have used their own tokens, but they're not there. So I think it's inevitable, because it is such a big improvement in efficiency in many ways. I think it is inevitable that central banks will ultimately go down the route of digital currencies or something close to that. Now, of course, another attraction of tokens on a blockchain is that you know how many are going to get issued, you know the inflationary pattern, etc. And there, of course, central banks have a slightly different approach, and if need be, they will print a lot of their currency. So whether it will ever obtain quite the same credibility as a system that is secure against inflation, because there they are secure, because you can read in the algorithm what's going to happen, right? Whereas if you look at the Federal Reserve and many other central banks, you have no idea how many dollars they're printing down the basement at any given point in time, right?
Yeah.
But I do think just the ease of transaction is also very important, because at the end of the day, people are probably reasonably happy to deal with the currencies they have known for a lifetime and understand. So just the improved efficiency of using it, I think, will lead most central banks to that conclusion sooner or later. And I think you should commend the Central Bank of Nigeria for being an early mover in that space. Whether they have found the ultimate solution for it or the ultimate way of doing it, I don't know. But at least they're trying, and they see the opportunity, because it's also a great opportunity to make it much easier for people to interact financially. It's a growth driver that's very important.
Fantastic. I want to ask about your investment philosophy. You're a restaurateur. In addition to your experience in financial markets, we've got your Seier's portfolio, which is pretty wide. There it is. Entertainment, manufacturing, IT. Tell us about it. At least in this stage of your life, what's your investment philosophy?
Yeah, there's not too much of a red thread there, but but I'm an emotional man that gets attracted to things that are either intelligent or nice.
Yeah.
But if you should say something, there's like a group of companies which I would call lifestyle, entertainment, strong, heart-driven investments, where perhaps financial gain is not the highest factor involved. I'm not a fan of just being. It's not charity. Charity you do on the side, right? But I'm probably a little less insistent on my restaurants or sports clubs, etc., to deliver great financial results, as long as they deliver great food and great experiences and win some championships if it's if it's a sports team, right? Yeah. And then I have some investments that hopefully will pay for some of that, right? And that's predominantly in the tech sector. But I have a couple of very interesting things also in fighting virus and stuff like that.
So healthcare and so on.
Yeah, not so much. But I have a very interesting investment in ultraviolet lights, which are killing virus, not just COVID, but be used against malaria, has an effect on mosquitoes and stuff like that. So that's in a completely different bucket, right? But in recent years, I can find myself almost only selecting new investments if there's a blockchain element to it, because I think that's the next big transformation, right? Can I still be tempted by something completely different? I probably can, right? But on what you just showed there, that's my own homepage, and people can leave their investment ideas and
you're taking pitches as well, right?
Yeah, exactly. And I get 500 or 1,000 a year or something like that. And recently I've redone it to say, if you're not blockchain, think twice about wasting your time uploading a lot of documents. Send me 10 lines, and then I'll tell you if you should go through the full process. And that's simply because I think blockchain is a transformative technology. I was very fortunate to see the internet early on, again, through good people leading me in that direction. And I haven't really seen an opportunity of that size since then. I think back then you had this feeling, this internet, don't really know how it's going to work or what's going to be the killer application, etc. But it just feels right. And I have the same feeling with blockchain. I think it's really going to change a lot of things. And here I'm not talking about speculation in cryptos and all that, but much more efficient processes, much more secure registration of ownership. Another strong use case, I would say, in Africa, that you can prove with certainty your ID, your ownership of certain assets, etc. So I'm a big believer in the potential of blockchain. But again, which one is going to be the big winner? That's the question. So you farm out a little here and there,
Mr. Lars Christensen, thank you so much for taking the time to join us today. CEO of Seier Capital, thank you so much.
Thank you for having me.